Hey everyone, John Henry here from School of Trade, and today we're going to be taking a price action trade today. It's a rejection that we had off of this big move down. Let me get my orders in place and we'll take a look at the trade here. So my first target's got to be at 37.5 just before we get to that swing low. I don't want to risk, tagging that swing low, double bottoming, and then all of a sudden shooting right up. The second target though can go all the way down here at 34. 34 quarter, 34.50, somewhere around that area. We'll leave it at 34.5 right now, and we'll see what price wants to do here. Now, overall, what I'm looking at, let me get all this stuff out of the way. This morning, we've been rising higher all morning, and we had this really nice looking, almost a multi-tiered channel setting up here, where a third top was kind of setting up there. But right at 8:45, and actually a little bit before that, you can see that green candle, we had this gigantic candle come in, this big old red candle. And it shot straight up first. You'll notice this wick right up at the highs here. It trapped a lot of breakout buyers right out of that move. Now, if you're familiar with some of the patterning that we use, this is a spike and ledge pattern. So we moved up, we spiked out, we faked in a bunch of buyers trying to attempt to buy that breakout just to see them fail straight back down again. And that's where a lot of this movement came from. Now, we did have big news at 8:30, but this move didn't happen until, 8:40, so it definitely took some time. If that is a reaction to the news, it took quite a while for them to actually react to it. Now, since we've fallen out of that area, we dropped right back down, had this big move lower, and you can see they are closing at least near their lows. This next candle didn't as much though, and that could have been maybe this swing back here, whatever it was, but we started catching a little bit of buying pressure. But the key part of this is that still closed red. So the sellers had enough oomph behind them to close that down candle, as big as this candle was, still down to the red side. So the fact that we have that, along with the fact that we pulled back to the EMA, and we had a big old trap right here, everyone that was buying this move down here got in probably above this bullish candle right here, just thinking, oh, yep, this is going to be the reversal. We had the news, what goes up must come down, or what in market terms, what goes down must come up. Looking to buy above that green candle, which is where they bought. They got stuck right there, which coincidentally is right at the lows of that consolidation. It's a retest of those lows, and that's why I like this so much. Those consolidation lows are retested to the tick and then immediately closed right back down in its lows. Look how bearish that candle is. So I really like the sell side on this one. We're short 4 contracts at 39, and the only reason I'm not going in more is just because the stop size has to be relatively big. It's a 3-point stop. I typically don't like that big of a stop, but in this case, I am expecting a bigger move, another continuation move back to the downside. So our first target's coming off here, if we can get that filled, coming off at 1.5. The next target, all the way down at these lows, is coming off at 4.5 points. So we're looking at a relatively big move overall. Now remember, this ticks in quarter increments, and each quarter is $12.50. So when we're looking at this, we're taking 2 off at 1.5, so that's 3 points, plus another 4.5 times 2, obviously, so that's 9. So we want 12 points total, but we have to times this by 4 because there's 4 quarters in a point. So that's 48 total ticks. Each tick is $12.50. That gives us $600 on the trade. So we're looking really, really strong to the downside here. $600 potential trade. Again, this is the S&P 500. So if you've got big account size here, you can definitely go in really big size here. You could easily go in several points if you wanted to. So, I'm sorry, not several points, several contracts. So we got that target filled down here relatively easily. Let me get my stop to break even. 39, place a buy stop for 2 right there. Now, we're getting stuck at this low here, and I don't really know if I want to use a double bottom. Let's go a couple ticks back. I'll be willing to give a point back, no more than that, but I'll give it a point stop back from our entry. So essentially what we did is we locked in 1.5 and 1.5. So we've locked in 3. I'm willing to give back 2 of those 3. And that's just because we've got 2 contracts left at a point. So it'll leave us with a point in the positive. But I don't really want to give this any room to come back on us on a double bottom. I'm only going to give it a tick. I'll give it a tick of room to come back on us. I don't want to put it right at break even because that's just asking to get stopped out. But I'll put our stop right at break even -1. You could go -2 if you want to be a little bit safer. I'm just trying to give it room. The problem that we're running into right now is we're coming straight into this double bottom and we're bouncing at that double bottom, which that's not what you want to see for a continuation move lower. So right here, if we had our stop to break even, we would have been stopped out of break even right there. So just keep that in mind. Again, when you move your stop to break even in the the S&P 500, you're asking to get stopped out. It's so frequent that you get stopped out of break even, especially after a point move. It's commonplace. So we've come back. We would have been stopped out had we moved it to break even. Our stop is at -2. I'm only willing to give back a point total on this. So all in all, we'll bank 2 points out of the 3 if we do end up getting stopped out there. But I do need to give it a little bit of room. So still holding the downside at 39, 2 contracts left, looking to take out 4.5 more points if we can really get that push lower. And we should be sitting in a pretty good trade. So we'll be back in a little bit, and we'll see if they can really get below that double bottom low at 37.25 and get a push a little bit farther down. All right, we're getting a big push down here. This is what we were looking for. Let me get my stop just above here. I'm going to go break even +1. See, this is the thing that happens so frequently, the S&P. You move your stop to break even, you get wicked out. All of a sudden, it goes dumping another, 4 points lower. So our stop is at break even +1 now, just above this candle's high. You could go to break even if you wanted to be a little bit safer. In this case, I don't want to give any of this back, and I sure don't want this to be a losing trade. So we've come 1 tick away from our target here at 34.5. Looking for one more push down here, see if they can get it down into that level. Conservatively, you could go a couple ticks more and look for maybe 35 instead, just in hopes that it, maybe it doesn't push down again. But with this amount of volume that's come in, it hasn't been a big burst. What you want to be careful of are these big bursting moves like we had here at 10:45. When you get a big burst like that, typically it's going to back up on itself for a little bit. It's going to say, whoa, wait a minute, what just happened? I got to figure out what just happened and, work through that first. And that's not really what we're seeing here yet. It's not big enough really to be considered a spiking candle like we had back here at 10:45. This is just more of a big move, if anything. But again, conservatively, you could move your target up to 35 and just see if you get that filled at 35. I'm going to hold at 34.5. I'm not seeing any reason to try to get out and skimp on my profits any. On this one. Now, if I do start seeing this back up, especially if I get, a bear trap down here and then all of a sudden this big bullish candle, I'm just going to get out with whatever it can give me. But I'm going to hold on to that 34.5 and see if they can get it filled. One other alternative you could do is take one contract off at 35 and see if you can get the last one down there at 34.5. Just, trying to give some options here. But we are seeing that volume come down. We're 1 tick away. Just need that one more push lower. And then hopefully we can get that filled. We haven't been sitting in this too long, so we may not get it filled right away. It is the S&P after all. But we are before the open, which is kind of nice in this situation because you really don't have to be sitting in a position very long to be close to front in line before the market opens. After the market opens, it's going to take 2, 3, 4 tests before you get filled. More likely than not have to trade through it. So we may be a little bit closer to the front of the line. There's only a couple hundred contracts that have been on there. And, well, it didn't really matter. It shot through it anyway. So we got that target filled regardless. 34.5, took 2 more contracts off. And that's the trade. We got $600 locked in that trade. Now we're reaching and digging down into a 200% extension of this trapping candle up here. So you've got to be really careful around this area. If you are going to hold on to more, if you see any sign of this turning back around, I wouldn't hold on to it and I would just get rid of it. Now, we may, again, this is starting to turn into a little bit more of a spiking move like this. Typically when that happens, you're going to reverse back up, maybe rattle around, same thing that we saw back here, and then dump again. That's definitely a possibility, but right now it's kind of 50-50. So just keep your eye on it. But overall, $600 on the trade for us. Beautiful trade short. Nice little move lower. Didn't have to sit in it very long either. So that's going to be the trade for today. If you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com. And as always, we'll catch you next time.